Today's show is sponsored by Peak Housing REIT. To learn more, go to thepeak.group.
55? All right, guys, Alex Kantrowitz is here. What kind of last name is that? Are you Italian?
No, I'm Jewish. That's
you
Polish
are?
name.
I can't believe it. Alex Kantrowitz from Long Island is Jewish. Holy shit. You're from 5 miles away from me.
West Hempstead.
Yeah. Okay, from West Hempstead, born and raised.
That's right.
We do the whole thing?
Yeah, sure. Let's do it.
Okay, but you've been in San Francisco, now you're back in New York, and you are one of my favorite writers. Do you call yourself a reporter or a commentator?
Yeah, I'm a reporter. I'm making calls, and I publish it in my Substack and on the podcast.
All right, I read all your shit. I think you're great.
Thank you.
You cover big tech primarily, but you've been branching out and you're on Substack. But bring us up to date. I'll tell everybody what you're doing now, but bring us up to the present. Give us like a brief history of Alex Kantrowitz. Like, how did you get to where you are now?
So I started in marketing and sales in New York City back in the day. I bought ads for New York City's Economic Development Corporation when they were
back in the day is what, 2012?
2009.
Okay,
when
that's not back in the day.
Well, in the history of the internet, it's actually kind of early because they were doing all print ads, and they're like, "What is the internet? What is Facebook?" I wrote the deck that was like, "You guys should probably do Facebook and not MySpace inside the company."
Okay,
learn
that's
Google AdWords.
That's a call.
That was a call. Yeah, okay, I'll victory lap on that one. And then I actually sold ad tech for a year because I was sick of doing support. I wanted to be in like the revenue side of the business. And so we talked about in the city how technology was the future all the time. Bloomberg was the mayor. And I was like, well, what am I doing here? I want to actually go be part of the future. And for some reason, I picked advertising technology and sold order management systems to publishers for a year. And then, the industry was changing so quickly. And I saw the reporting on it was terrible. The reporters had no idea what was going on. They weren't sitting in the industry. That's why you guys are so good, right? Because you're here, you're able to deliver a podcast where like people actually understand what's happening because you're doing it.
We're okay.
Now I'm giving you credit, by the way. Best financial podcast.
Thank you.
On the market, period. Full stop. And so thank you guys. And then after reading these reports, I like to write on the side a little bit. And then I just said, screw it. I'm going to go write full-time, freelance for a little bit, wrote for Advertising Age and ad publication. 5 years at BuzzFeed in San Francisco. I published my book, Always Day One, towards the tail end of that and went independent in May 2020.
Tell us about Always Day One. I know the subject matter, but tell the audience.
It's a book about how the tech giants are excelling at corporate reinvention. So you look at each one of the 5 companies, Amazon, Apple, Facebook, Google, Microsoft. They've been able to reinvent themselves over and over again throughout their histories, which is why they've been more dominant as they got bigger, which is totally reverse of what we typically see. Companies get bigger, bureaucratic.
It's the first time in history that these companies have improved as they've gotten bigger.
Yes.
Rather than like set themselves up for conglomerate status decline.
Exactly.
I did a stat like a year ago, 6 months ago, that Microsoft grew revenue as quickly like a year ago than it did in like 1998 or something, which is ludicrous because it was like 3,000x bigger.
Which is, and it's amazing, especially given that people counted that company out for 10 years, really. Yeah. And it was stagnant for that long. And now to see these revenue increases is pretty amazing. So the book looks at each one of these companies, a chapter each, one on Amazon, one on Apple, one on Facebook, Google, Microsoft. And it talks about the systems and the processes they've put in place that have enabled them to reinvent.
Who is it like a good book for? Like management or investors, or is there something for everybody in there?
I like to think there's something for everyone.
Okay.
Definitely, I do look at financial decisions. But yeah, I mean, if you're working inside a company, if you're partnering with the tech giants, if you're curious, how they operate. If you have a big company, maybe you're Brian Armstrong, you're running Coinbase, and you're
we're going to talk about him.
Figure out how to handle the size that you have. Then it could be a book for you. And
tell us about the Substack now. So I'm a sub.
Thank you.
Love your stuff. I see you on TV a bunch. Mm-hmm. Tell people how they can follow you and what's going on with it.
Yeah, so my Substack is called Big Technology. It's a story a week. It's completely free. And I try to basically assign myself the most interesting story of the week when it comes to the tech giants. And I put a handful of links of interesting stories at the bottom. It's reported, so I make calls during the week, and then I write what I find out on Thursdays. And then,
so you're not just reading everybody else's shit and synthesizing it. You're actually you're doing reporting.
Although there are definitely weeks where I'm just like, I got nothing, let me do a take. But I try to do something reported, try to do a scoop, as often as possible. And then I have the podcast, which you were on.
Yes.
It's called Yeah,
Go.
It's called Big Technology Podcast.
Yep.
And when I went independent, I was like, can I still speak with interesting people? I don't have the BuzzFeed brand behind me. Launch a podcast, and it's been super fun. Getting this podcast off the ground. It's 2 years old now.
Yeah, your podcast took off during the pandemic because these stocks were very much still in the news, and people wanted information.
That's right. Yeah,
right.
And they also had extra time. It was people were like, "Don't do a podcast during the pandemic. There's no commuting." Actually, and you guys know this well.
Yeah,
people had time to explore different interests, try things out, and it was actually a great time to release a podcast.
Absolutely, people had plenty of time. They were wandering around their neighborhood like zombies in their pajamas, and that's when they were supposed to be working.
Right.
And then
Still
they were gardening and baking, and you could do all of those things listening to podcasts, drinking, beating their spouse, whatever. And like all of those things lend themselves to good listening time. So I started mine during the same period of time.
Right.
And this is now the descendant of my original podcast, which I mentioned to you was very lonely. All right. So we're going to start with earnings season. We're officially underway, Mike. You excited about this?
Here we go. Yes, I am. Yes, I am.
Okay. So we started off with a dud. Morgan Stanley and JP Morgan both really did not have much great to say. The good news is nobody expected anything. So that's what they got. Let's start with Morgan Stanley. So second quarter profit fell 29% from a year ago, reflecting a drop in corporate deal making. That sounds huge, and it is, but the one caveat that I think is worth bringing up is that's versus the biggest bubble quarter of all time, Q2 2021, which was basically a SPAC every minute. When they weren't doing SPACs, they were doing IPOs, all kinds of activity. And so, of course, this quarter would be down, where you can't bring a company public. So I don't think it's as catastrophic as maybe that number reflects. Mike, what do you think about that?
The number that I was looking for was the investment banking revenue, including fees from mergers and acquisitions, was down 55%. That actually sounds...
That sounds catastrophic.
It does, but considering... I thought it would have been totally dry. I think next quarter might be down like 80%.
Next quarter will not improve.
No, it'll be worse. It'll be worse.
Wealth management revenue was $5.7 billion in the quarter. That was down 6%. So that's like flat.
But if you back out market effects, it's probably up a little bit.
Meaning they probably raised money but lost a lot from what happened with the S&P 500, et cetera. Wealth management revenue is 44% of all of Morgan Stanley's total revenue.
That's the biggest percentage of any of the banks, right?
Way big, yeah. Way big. And they don't... number of retail trading clients at Morgan Stanley was 7.8 million at the end of June, up from 7.6 million. I think that includes E-Trade.
Has to be.
Average daily number of retail trades the company handled was 880,000 this quarter, down 13% sequentially, so from Q1. Yeah, nobody's having fun trading. I think it's a big, important stock, and I think for a lot of reasons we should look at that, and perhaps that should make us more cautious about the overall market. But then I would also point out, like Morgan Stanley, Goldman, pretty unique. It's not like there are 20 other companies in the index.
And I would point out that Morgan opened down, how many was it down? 5% at the open?
Morgan Stanley?
Morgan Stanley?
I think it was worse.
Okay, it just went green.
Is that where it's going out today?
It just went green. We were just talking about this before we started. The S&P is flat over the last month. It feels a lot worse. NASDAQ's up 4%, which is, it's what you want to see. The news continues to get worse, but the stock market has stopped going lower. At least the indexes have.
Does it feel flat to you?
Does not feel flat.
If we didn't give you that stat, would you guess it's flat, up, or down for over a month?
I mean, I would have guessed down, but not dramatically down. I think it's done most of the damage in the early parts of the year. The tech giants have actually fallen significantly, I think, over the past month. But the S&P, I'm looking at it all the time to try to gauge where these companies are. And I think it took that big hit early on, and now we're starting to test how low it can actually go.
Let me tell you something.
It's going to go lower?
No, I wouldn't know. If Apple and Microsoft were down as much as Meta and Alphabet,
right,
this market would feel like 2008. Like percentage-wise, that's where we'd be. So,
that bad.
Like it's very fortunate that those stocks have held up.
Oh, I forgot to throw this in the doc.
And they report in 2 weeks. So
I forgot to throw this in the doc. I did an equal weight version of the Big Seven. So Apple, Amazon, Google, Microsoft, Facebook, Tesla, and NVIDIA.
Okay.
And they're in a On an equal weight basis, they're down. They're in a 40% drawdown.
If you equal weight the seven of them?
Yeah.
How? What's dragging them down the most?
Well, and Netflix is down like 75.
Well, thank God they're not equal weight in real life.
Yeah, Microsoft has been. They're all getting hit except for Apple's. Apple's the only one that's not in bear market territory on its own.
But just a bit.
Barely.
It's down 19% this year. Josh, you thought last quarter that the party was going to be over for Apple. It turned in a decent quarter though, warned of some bad supply chain stuff. When do you think that party ends?
I think it's.
Is this the quarter?
I think a lot of it. Look, China growth or non-growth is going to be a really big part of the story. Mm-hmm. And then I just think like the rising costs of financing everything and how many people are really in the mood to pay up for the next phone and what that upgrade cycle looks like. And do we even care about the upgrade cycle as much as we used to? What's your take on how important phone sales are relative to services now? Are they still twice as important or are they only like neck and neck?
I would say phone sales are more important than we've weighted them previously because, well, they're still 50% of the company.
Yeah.
And, when you had zero interest rates, all of a sudden you're looking at the services revenue and you're like, oh, okay, I can factor in X percent of growth. People are going on air, saying, look, we got to value Apple as a software company, not as a hardware company.
You can't really do that.
You can't do that anymore.
Yeah.
So I think the phone stuff is really important and there is real risk now because we know that they went through massive upgrade cycles when everybody said, okay, I'm at home, I need a new phone, I need a new computer. That's kind of tailed off at this point. People have upgraded. And I think you're totally right that we're in difficult financial moments right now. Sentiment's bad. And is this the moment where you're going to drop $2,000 for a laptop or $1,500 for a phone?
Look at the semi sector and explain to me how Apple's going to have anything good to say about MacBook and tablet.
Apple was completely unimpacted by the pandemic. Their earnings revenue were not impacted one iota. And as a matter of fact, I would argue that right now fundamentals, not that they don't matter, but macro is driving the picture, the ship. That's it.
Actually, before we get into Apple, let's just do JP Morgan really quickly because basically they reported earnings today too. Also a big miss. They actually are suspending their buyback because they have to get their balance sheet ready with enough capital for Tier 1 and possible loan loss reserves. JP Morgan Chase opened down 4.25%. At the low, how bad was JP Morgan? Is it down 6?
I don't know if it's down 3.5 right now.
All right,
but at the highs of the day.
But it hit a 52-week low this morning. Mm-hmm. It's not as bad in the afternoon. They're setting aside another $428 million. So I think they have now reserved for billions since the start of this year in loan losses. Last year there were no loan losses. Spending on Chase credit cards rose 21% from a year ago, 15% higher than the first quarter. That's because everything costs more. Chase customers also started carrying more credit card debt, with card loans up 17% from a year ago. So this is where it gets weird, Alex. They're basically saying everything is fine, but they're going to prepare for a recession anyway. Mm-hmm. And that's like very emblematic of, I think, a lot that's going on right now, just in general. So this is Jamie Dimon, quote, "The current news is actually quite good. When you make a list of potential issues going forward, it could be a soft landing or a hard landing. You do have a serious set of issues out there." And then the CFO goes, "The truth of that is we've looked very carefully into the actual data and results, and there is essentially no evidence of any weakness in the actual results. The questions are about the outlook."
You know that scene?
That's why it's so hard.
You know the scene in Austin Powers where the dude is like saying no, and there's like the steamroller that's like 100 yards away from him, moving in slow motion.
Yeah,
it feels like that's what everybody's like. Everybody feels like a storm is coming, and they are battening down the hatches, which is very weird because most of the time you don't have like multi-quarter runway to prepare for an oncoming economic downturn where it seems like everybody is ducking for cover.
So how do you guys read it? Because we are seeing some good signs. Labor market is strong.
It's very weird.
And, of course, the Fed is raising the rate, so we're going to expect some type of slowdown. But, like Josh mentioned, people are spending more money. Okay, there's inflation, but people are spending more money.
On a real basis, they're spending more money, too.
How much of this do you think is a factor? A lot of the job loss, like layoff headlines so far are in tech, telecom, media. Or maybe it's just that those are the only companies anybody pays attention to.
It's just the biggest companies. That's where the headlines are coming from.
But you could have a scenario where NASDAQ listed companies, venture-backed startup companies, former SPACs, like that whole group of stocks, which are heavily concentrated into 4 or 5 industries, do lay off a lot of people and withdraw a lot of offers. But then you still have this massive shortage of pilots, truck drivers, nurses, school teachers, manufacturing people. Like both things can happen at the same time. And we talk about the economy like it's all one economy. Economies are very local and they're very industry specific. And so like both things can be true at once.
Yeah, absolutely. And you look at the magnitude of like slowing down and layoffs in the tech sector, which is, again, the one that's getting all the headlines. It's not really that bad.
It's not.
I mean, you're talking about
It's
we're
a
going
trickle.
from we're going from expecting 200,000 something jobs to like 196, and people are. Then you see a headline, oh, this is a major slowdown. Okay, it's not as many jobs as it was in the past, but
Alex, I had in the doc an article from the journal, Tech Hiring Cools Off.
Yeah.
And I read it this morning and then I deleted it. You know why? It was just a headline article. There's nothing in there. The data was so uncompelling.
that's exactly I'm picking up on that. So
I
here's the line.
I deleted the
Yeah.
doc. There's nothing in there.
Here's a line
You're
from the
seeing that
story.
too?
Yeah, Janko Associates Inc. wrote in a report on Friday's numbers in which it projected the economy would add 196,000 IT jobs this year,
Right.
down from about 213,000.
Oh my God,
So
it's like the 30s.
I'm glad you mentioned
It's
that.
like the Depression.
I literally deleted it because I'm like, wait, why is this a headline?
Exactly.
There's nothing. It's
I
so.
will explain to you.
It's Twitter. It's Netflix. It's Tesla.
That's right. It's
the
companies
big
that
ones.
people.
Right.
It's
It's the big
companies
ones.
that people recognize when their names are in a headline.
Right.
So, but it's not.
So it's
that
great.
impactful.
It's great for journalists,
Well,
but
yeah, and there's something that was someone brought up on my podcast recently, talking about how we're starting to see what he's calling responsibility theater, where you have companies that are broadcasting the fact that they're cutting, or there was that Mark Zuckerberg
and Reed,
line,
yeah, and then
leaked.
Reed Hastings.
Exactly.
They both
yeah.
said the same thing.
They're
Wait,
saying
what
this-
did Zuckerberg
Mark
say?
Zuckerberg said, we're going to raise our goals, and some of you might leave, and that's okay. Now,
Yeah,
I think they're
yeah.
going to do a layoff. It looks like they're looking for low performers, but there is this sort of race for companies to puff their chests and talk about how responsible
Especially
they're being.
the-
Here's the quote from Mark
Especially
Zuckerberg.
the VCs. They want to like.
VCs
it.
in particular, because they're going to go to their LPs and be like, all those other people are spending like drunk sailors. Look at the numbers, but we're telling our companies,
What did you
gotta
call
be
it?
strong.
What did you
Here's our
call it?
tweet thread.
Responsibility theater. It's actually
100%.
You guys had Packy McCormick on
Yeah.
the show a couple weeks ago. I think he's the one that brought it up on my show.
Okay.
it's a great phrase.
So Mark Zuckerberg said,
Yeah.
quote, realistically, there are probably a bunch of people at the company who shouldn't be here. Oh, it's funny how you say that when the stock's down 58%. Reed Hastings said,
It's a bunch of companies and people at every company. That
Reed
shouldn't be there.
Hastings said, if you'd find it hard to support our content breadth, Netflix may not be the best place for you. What?
Well, no, Netflix is f***ed up.
Why?
Like on a lot of levels.
Well, it sounds like you know something.
Everyone knows this. This is like out there. Did you listen to Andreessen talk to Joe Rogan?
I'm partway through that one.
Okay. Did you get to the part where they were talking about Netflix, just Netflix stuff in general, and how do you lead a company when a third of the people working there want to be like protesting in the street on the? Okay.
I didn't listen to that part, but yeah, why don't you?
So really,
go ahead.
well, I don't know if it's true, but it's a really funny anecdote where Joe Rogan is talking to a friend of his. She's an executive at Netflix, and she said somebody that works for her, like, comes in the office and is like saying blah blah blah, like whatever they want to do, and she says something back, and the employee says, "This is to her supervisor. How do I know you're not with the enemy?" And
Yeah,
she's
that
like,
makes sense. Yeah.
I'm your
And
fucking-
the company.
I'm your fucking boss.
Right.
Like it's just I think we've lost track of that. So if you're Zuckerberg or you're Ted Sarandos or whoever's calling the shots at Netflix, and you do have these people who are low performers with big mouths who are not there for the same reason as everybody else, maybe a mild recession is like not the worst thing because it gives you pretext to say, hey, A, you're a distraction, B, you're not really doing your job anyway, and C, we need to lighten up on headcount. So maybe if your social issue bullshit is keeping you from doing your work and you'd rather do that, here's your chance. Here's 6 months severance, GTFO, best of luck. So I believe that there will be some of that.
And Netflix has always been, I think it's been a bad culture. That's just my perspective on
Yeah.
it. But when people ask me, which one of these FANG companies should I work at? I'm like, have fun, but just don't go to Netflix. It's
Really?
a culture that's straightforward to the point of almost being mean. It doesn't seem like a place that I would want to work at.
Oh,
It's
because he
feedback to-
fired He fired one of his senior people that he built the business. I forget her name, but she was like a very. Do you remember
They
that?
fire a lot.
That was a huge story at the time.
Was this coming from the top down? Like this is weird.
It was from him.
Down. And it
just
is
ruthless.
So you have two types of feedback cultures. You have a feedback culture that's supposed to circulate ideas inside the company. You should feel good going to your manager and saying anything, because if your idea all the way at the bottom of the chain, can get up to the top, we don't want that to be lost in the middle management. We want that to go. So feedback should go up and down.
What do you guys say?
In Netflix.
Yeah, I mean, yeah.
We have that culture?
We have that culture, right?
Yeah.
I think so.
That's a tepid yeah. You're fired.
I'm going to be honest. I wasn't fully following. I was multitasking for a second.
At Netflix.
See the culture that we have?
This is a good culture.
He wasn't fully following a podcast that he's producing.
I was trying to think of the name of the book. I really liked that book, the Reed Hastings book.
What are you doing over there? Are you mining crypto? What?
Conference call stuff.
All right.
This is tough stuff. I ask my podcast editor all the time for feedback. He's like, bro, I was just trying to make sure the audio sounds good. I was like, all right, thanks, Nate.
He's not there for the content. He's there for the quality.
It's true. He's like, I like the show, but I'm mostly looking at the levels. But so the Netflix culture is different. So the other culture, I think Ray Dalio has this culture too. It's feedback culture to make you stay in your place.
Radical transparency.
I think that's so stupid. I think that like trying to keep people, if you put people in their place, right? You're encouraging them to be afraid and to think small. I'd much rather have a company that encourages people to dream big and share those ideas.
Well,
and so I think Netflix is, and that's going to collide.
I also think there's a thing though that within a company, you do want people to express their opinions and their ideas, but not about everything.
Oh, for sure.
So I've heard Ray Dalio say this publicly, not about his employees, but just like generally, talking about the economy and whatever. I've heard him say he's a believer in this concept of ask yourself if you've earned the right to have an opinion.
Right.
On the surface, that sounds gross, right? Like on the surface, that sounds like, oh, you know everything and nobody else is qualified. But there's something to that. Like not everybody should weigh in on everything. So, like, listen, I went through this. I have a lot of opinions. I don't know if you could tell. My wife was going through ankle surgery. I was very, very generously sharing my opinions with the surgeons. And I know in the back of their head, they were like, listen, this is a process and we all do have to come to a consensus, but not you, asshole. You work on Wall Street. Like, we don't really need your opinions all over this like thing. Like, let the doctors confer. And they didn't say it out loud, but I could just sense the vibe off of them. So if you're at a Bridgewater and your job is to be like the booth babe at the hedge fund conference or the guy whose job it is to write code for a specific natural gas trading algorithm, maybe you don't want to stop Ray Dalio in the hallway and be like, I think we should get overweight commodities this week, right? So like, I don't know where that culture should start and stop. But I do think it's like really hard to figure out where the line is.
But Netflix is pivoting to the ad subscription the ad service.
Oh, yeah. Microsoft
They're partnering with
partnership.
Microsoft. What is that? That sounded weird to me. But does that sound weird to you? I don't really know anything about that.
No, not at all. Like Microsoft has a big digital ad business, and Netflix is going to need a trusting partner. So Microsoft's been selling trust this whole basically its entire Satya Nadella era. You can trust us. We're good for security. We will, we're a good brand and we'll look out for your brand. When you have a salesperson like that inside of Netflix HQ, they're likely going to win the deal. And that's what happened to Microsoft. And I think Microsoft is also fairly desperate to be associated with cool companies, even though Netflix has had a kind of a rough go of it. But remember, they tried to buy TikTok. So what does that mean? They're probably going to come in with pretty favorable terms to Netflix to be like, we want that shine. And so therefore, we will make this deal for you, so we can work with you.
Microsoft I guess I wouldn't say outbid, but they were competing with
Who else was at the table?
Google and NBC Universal, Comcast.
NBC Universal not big enough. Google, tons of brand safety concerns. Like look at what happened with
NBC
YouTube.
Universal not techie enough also.
Right, exactly. So they're a bad fit. What do you guys think about this? I heard this, I don't know if it's a rumor or whatever, but someone said this might just be the early days of Netflix trying to get acquired by Microsoft, and this is their first step to partner together.
I don't think
Possible?
So big.
Even
still. It's
$77 billion.
It's down huge, but it's still so
77.
big.
77. So the thing is, down 75%. What if this ad thing is not a absolute complete disaster, and they convert 1 out of 5?
I'm long the stock. I actually think that's exactly what's going to happen.
I think that Netflix has been punished too badly for its subscription, for its subscriber base slowing.
Isn't Peacock working? Ad-supported Peacock, ad-supported Hulu. These things are working in the wild.
Hulu is killing.
Of course. This has always been, it's so interesting because it's always been the model. You show content, you run ads.
Yeah.
And, there was a while where there were these companies that were religiously against advertising. But, people don't love advertising, but they don't like spending, more and more money. And then when you're a company that needs to grow, you have 2 options. Charge them more and worry about churn. We know that Netflix churned.
Yeah.
Or run ads and you can make more money.
Look at the last.
This is natural.
The
It's such a no-brainer.
last 2 quarters for Netflix. I mean, we remember this one,
Yeah.
and then this one, and now it's just going sideways. Are we setting up for another? Is it going to be
2 of the
another?
worst gaps down?
I mean,
in a large.
and you know what's
cap
so
stock.
bad? Not even a fucking attempt, really, to fill either gap.
No.
Like not even nothing.
The waterfall. So this stock, how much market cap did Netflix?
Was it
70
250 at the peak?
No, I think it was bigger. I think it was 300.
Let's see. I got you. Y charts to the rescue.
Have you seen how many commercials Hulu shows you on the
Oh,
wall?
it's abusive.
No,
It's so
it's
many.
I paid premium. Come on.
It's crazy.
305 at the peak.
305 billion, and it's 77 now.
306. That's too much. And maybe 306 was too much. Like everything was bid up too high. But 75 seems like way too
What would the
low.
reaction be in Microsoft stock if they made a bid for Netflix? If they paid, what is it, 170 right now? What's the price?
77.
He talks about price like price.
Oh,
matters.
174.
The market cap.
174?
The market cap
Right.
of Netflix is where it was all the way back in the summer of 2017.
If Microsoft bid 225, what would be the reaction in, I think both stocks would go up.
They could probably get it for less. And yeah, I think it would be a good move for Microsoft.
I don't know if they can get it for less because I think that brings out other bidders. This is still a crown jewel.
Right.
This
It's
is
still the biggest.
It's still the biggest streaming service, and it's so global. It's not a company that's like, oh, we're going to try to go global. It is huge in so many countries. Insurmountable lead in some of the most
Somebody
important
was saying
countries.
if they're hearing that for every shared password, there's like 4 or 5 people that share it. So Netflix might serve 1 billion people.
Good for your advertising business if that's the case.
That's exactly
Great
right.
for you, right? Yeah, keep the password.
So if
sharing.
they convert 1 out of 5, 2 out of 5, that could be serious numbers.
Yeah, and we all know that TV advertising, which is what Netflix would sell next to, is the most valuable form of advertising.
he
'Cause
has
you can reach big audiences.
Satya
and
Nadella
be
has
targeted.
studiously avoided media. Like he
wanted
watched
TikTok.
He wanted, did he though, or he wanted to be in the conversation? Because to your point, they want to be associated with cool.
Right, but I mean, you go in and you're deep in negotiations there.
He was.
I saw him talk about it at Code about what happened to the TikTok deal, and he did seem kind of disappointed that he got ghosted by the company.
Did the Activision deal go through?
I don't know yet.
And then Oracle was involved in the TikTok negotiations. What the hell was that about?
Well, that was a weird one.
That was weird, right?
I really haven't understood much of what Oracle's been
and
up to.
you're not even including them with the tech giants, and it's still pretty big.
It's big, yeah, but it's
Yeah.
also, I mean, it's database business in an age where we're moving to cloud.
It's very not sexy.
How long is Oracle going to be able to, handle that? I don't know.
I don't either. Let's do Robinhood and Coinbase.
One more tech giant we don't really talk about that much. I guess is also boring. Adobe. Adobe and Oracle are both $170-ish billion. Both mega caps.
Right.
Boring.
Adobe is a very straightforward company, right? They figured out their recurring revenue model.
Mm-hmm.
Everything seems good. Nobody cancels. Is that basically what's going on there?
Question is, what their growth prospects are. Because if you're a long-time designer, you're going to use Photoshop, Illustrator.
Yeah.
If you're just coming up, the hot software to use is Figma. So
Who makes that?
What? Sorry, what is it?
Who makes that?
Figma. It's their own. They're
Okay.
a private company now. Yeah. So if you're going to use Figma to start, then are you going to then move to Photoshop? That's the question. So it's possible that these companies that decided that they wanted to start web native and not download might impact Adobe's growth potential in some ways.
I'd be so long before that shows up, though.
Yeah, that's why Oracle's still a tech giant. Inertia is one of the most underrated forces in corporate America.
So
I totally agree with
We've
that.
got the tech giants. I think in 2 weeks. What are you most looking forward to?
I mean, I look forward to Meta. earnings
Such
the most.
shit. It's like it's a cheap. It's 16 times earnings. Mm-hmm. Sheryl Sandberg just left. It's the messaging around this company is such a shit show. Like nobody even understands what they're talking about anymore.
Right.
Their messaging is like on another planet, divorced from what their real business is, which is Instagram. And I don't. At what point do they like give this Meta thing up?
They just started.
I don't
so
think they're going to
committed
give it up.
this.
Yeah. So I mean, yeah. Well, also I'll say with their earnings, they could end up actually having a decline in revenue. I think they were
Their
29
first ever.
First ever.
Yes.
And if that happens, what's going to happen to this stock? I mean, that's what I'm particularly keeping.
Well, you'll find out why it's 16 times earnings.
Well, so this is what I wanted to ask you about. Do you think that the beatdown of the $10 billion or whatever they lost on the metaverse is maybe not what Wall Street is focused on? It's like, no. Mm-hmm. We know that they are one of the most highly sensitive companies to the global economy via advertising, which is the first thing to go. And they're getting beat down because we know that that's going to slow down. And the $10 billion loss, it's a drop in the bucket.
You're right about that because I think you're seeing that reflected in Snap, in Alphabet.
Google now.
Right. Google didn't change its name to Meta. It's a big advertising business in a global slowdown.
Right.
Like sometimes things are more straightforward than we think. I think you're right about that.
But the thing with Meta is they are cheap. They are still producing gobs of free cash flow, and they already got annihilated.
Stocks in half, right?
I mean, I think it's down 60.
53% on the year.
So what do you think they're going to do on the call? What do you think they want to focus on?
I mean, I think they're really going to have to answer some questions about what's happening in their business because there's, we talked about a few of them, but there's so many. It's almost like when you talk about the challenges for them, you can lose track. So you have the Apple anti-tracking changes that are making it impossible, making it impossible for advertisers to measure whether their ads are working. And of course, the company is working on solutions to that. But you can't really beat the fact that you used to have a pixel on a website that would tell you if someone bought, and now you just can't tell. So how do you optimize? So I think that's one. I think they're getting their ass kicked by TikTok. Mm-hmm. People now use TikTok more on an average day than they ever used Facebook on an average day.
Yeah.
So if you use TikTok, you're going to spend more time there.
And the younger you are, the more likely it's
exactly.
True. Right.
Now so that leads into the third issue, which is Instagram. So Instagram right now is in the middle of a pivot to start to try to take, to compete with TikTok
Reels.
in some ways.
Reels.
It's a very confused pivot because you have different things you go to social networks for. You have your friends and family, and you have the things you're interested in, and you have entertainment. Instagram and Facebook has always made their money. The bread and butter has been friends and family with some interests involved. What TikTok is doing now, what Instagram is doing now when it tries to compete with TikTok is it's changing the entire dynamic of the feed. And it's
showing you people you don't follow.
Right, exactly. And now it's trying to get in on that entertainment, which is where TikTok has had all this success. The problem is you end up in this situation where you're going to forsake your bread and butter to try to half-heartedly introduce some of this stuff that's been really good for a competitor. And you almost end up stuck in the middle. And that's why I really think that if they want to try to compete with TikTok, you got to go all in on it. You can't go half. And I think
should they have come up with a completely new app to just be a TikTok clone?
What I would have done is taken, and this is what they did with stories when they were getting their butt kicked by Snapchat. They put stories in the top of the feed, and we said, we don't care that this is the most important real estate in Instagram, stories up top. What I think they need to do now if they want to compete with TikTok, the front feed of Instagram has to be exactly like TikTok.
Wow.
And then
just open it up onto Reels.
Exactly. And then you can preserve friends and family content one tab over.
Look at it separately.
TikTok tab, friends and family content tab. You can't have one feed with both. It's confusing and it doesn't make any sense.
So two things. Creators like myself have realized the cheat code for more followers on Instagram is to just feed Reels. So when John and Duncan create video clips of the show, I'm like, can you please make that a sub 60-second reel? Because I know 5 times the amount of people will see it than if I just upload it as a timeline video.
No doubt.
And that, I think, makes it very clear what Facebook's corporate strategy is. If you give them Reels, they will give you an audience because that's like killing TikTok or fighting back against TikTok is the whole ball game right now.
And that's what I guess that's what I'm saying is if you're going to go that way, go all the way.
Yeah,
we know you might spend 5 minutes on Instagram checking out what friends and family are doing. then you'll spend an hour on TikTok.
Okay, so in your version, you open up Instagram and it's on the Reels screen.
Period.
So it's a full screen vertical video.
Correct.
And it's most likely somebody you've never heard of. But
Yes.
you're being served that because a lot of other people who were served that either liked it or engaged with it.
And remember how you said that you're going to use this cheat code of creating Reels for them?
Yeah. Well, that was like 2 seconds ago. So
they
I
have
remember.
right. So they have 1 billion people.
Yeah.
And TikTok might have somewhere close to that, but they still have this massive user base that's going to want to get reach.
Remember how bad?
So that putting it front and center will end up improving the product because it can't really compete if people are going halfway.
What do you
also.
think the odds are that they announce that or just like slip it out surreptitiously, just start doing that?
High.
What do you think?
I think it's
think
more
it's
than
high?
50%.
Okay, so on that day, TikTok/Chinese government is going to get pissed off. They're going to have to figure out a way to fight back.
Yeah, it's
Okay.
going to be a tough fight between the two of them. But yeah, this is where we're heading.
Remember how bad Facebook was at the IPO? Obviously,
Yes.
it was a complete disaster. Facebook is in a worse drawdown now. It's deepest ever. And I do think,
60% is the worst drawdown it's ever had.
yeah, I do think that a lot of these like percent off high numbers are going to get investors into a lot of trouble. Now, I'm not saying with Facebook in particular, but you're talking about names that probably had no business ever trading where they were.
Yeah.
And people are anchored to fake, to like,
Those old prices were based on literally nothing.
Yeah.
So speaking of, let's go to Robinhood.
I cannot wait.
When is this shit show?
So throw up this chart. This is from Vandertrack. The premium traded in small options, out of the money options, which are retail. And we're looking at a chart of puts and calls, and they are just drying up. They're just rolling over.
So you know the stat where like 90% of all options expire worthless?
It's not. It's 100.
It's 100%?
Yeah.
Right. But like the problem is one time it works and it was like you bought a lottery ticket, but you don't look at it like a lottery ticket. You look at it as like, I'm a great options trader.
My first big
And then
options
you
trade
just keep going.
was Netflix 2010 when they split the DVD service. I bought puts. The
Nice.
stock was down 35%, and I thought I was going to retire in 2 weeks. I said, if I just keep doing this.
You thought you were Tudor Jones.
If I just keep doing this, it's over. So there was an article in Market Watch, or stat in Market Watch today. An analyst at Mizuho, Dan Dolev, was talking about Coinbase, because Coinbase is the same thing, right? Trading is just drying up. Its market share among 30 of the largest global exchanges averaged 2.9% in July, far below the heydays of 2021 and below Q1's 5.4%. So it's probably, this guy said it's probably outside the top 10 of exchanges as measured by global volume. Holy shit. And the stock of Coinbase, which is one of those ones that you should forget about the anchor, but I'll do it anyway, 86%.
Is that really? Holy shit.
It's almost hard to believe. It's 86%
What
off
was
its all-time high.
What was the price of the stock at the high? It was like a $500, $400 stock.
Who care? I mean,
I care.
This is just truly unbelievable. The price. The price was, it was a $300 something stock.
Right. So it's not normal to have a $300 something stock right after an IPO.
It IPO'd at like $300.
I know.
But
so
whatever.
let's just start with that though. That is not normal. And this is way more normal. Where is it now? 55?
So the market cap was 76 at the peak. It's at 12 today. Unreal. Alex, I want to ask you about this. So Brian Armstrong wrote a post that he called Operating Efficiently at Scale. Did you read this one?
Yes, I did.
So I want to ask your opinion on this. So he speaks about driving more efficiency, the transition from a hungry, scrappy startup to a bloated company that got out over its skis. And I want to ask, what the is with these companies, the KPIs, the CPPs, like what is with all these, I made that up, but all of these acronyms that, can't we just talk like normal people? Here's a direct quote. We use DRIs, in parentheses, directly responsible individuals, to help us execute faster. DRIs balance input from the team and make clear decisions in a timely manner.
DRIs it's like Harvey Keitel in Pulp Fiction. It's like the wolf. It's like you call the DRI Listen, we got a body in the back seat of the car.
I feel like I'm
head
taking
blown
crazy
off.
pills. DRIs, just call them
We need you to execute.
team leaders.
Yeah, it's terrible. And I thought this was an extremely concerning post to read from the leadership of Coinbase.
I'm not concerned. I'm out.
Yeah, acronyms and all. It did feel like Brian Armstrong was kind of going to the Jeff Bezos school of managing a big company. So we're like 3 different things that I saw in that post that like made me think of Bezos. This DRI thing, basically he wants people lower down to make choices. At Amazon, they have this thing called one-way doors and two-way doors. A two-way door is a decision, you guys know about this? Mm-mm. A two-way door is a decision you can go back on right away. And Jeff Bezos is like, if a decision is a two-way door, make it and then just see what happens and you go back. A one-way door is a decision you make and you can't really take that back. So that should be something that we decide. But we have to make the two-way door decisions quickly. So I think that was what he was saying with that point. He also said organize teams into small pods of about 10 people. That's another Jeff Bezos thing. You want to operate in what he calls 2 pizza teams, which is teams that can be fed with 2 pizzas. And then the other thing he said was like directly out of the Bezos school of management.
I'm my own team, so I can definitely be fed by 2 pizzas.
Me too.
Yeah.
And then the last thing he said was ship products, not slide decks, which is, again, like banning PowerPoint. And Coinbase banning PowerPoint, and Amazon, they did that. But for me, the question is not whether Coinbase can Coinbase should know. The fundamental question for this company is not about whether it's innovating fast enough or reinventing itself. It's the fact that the assets that are traded through its platform are now out of favor.
Yeah.
And to have this long post about DRIs and
that is not going to be the thing that matters. What's going to matter is does the underlying commodity that you built a brokerage for
absolutely
ever recover?
And it just showed to me a tremendous lack of awareness of what the real issue is with the business.
Which is?
Well, what should he have written? He should have written like his take on Bitcoin and whether or not it's going to bounce, because that's all that matters.
I don't know
for
what
him.
You can write if you're Brian Armstrong right now.
We messed up. I mean, so we spoke about this last time they reported earnings. They ended Q1 with 4,948 full-time employees, up 33% from last quarter, and are pleased with our ability to attract and retain talent. So we've spoken about this chart a million times, but the stock-based compensation of Coinbase was so far out of control. You had retail trading down 51% last quarter. It went from $177 billion in Q4 to $74 billion in Q1. What's it going to be in Q2? $20 billion? I mean, honestly, it's going to be a shockingly large drop.
By the way, I think this is entirely reasonable. After 18 months of 200% year-over-year employee growth, many of our internal tools and organizing principles have started to strain or break. Yeah, no shit.
Yeah.
So maybe that's the real point that he was trying to make.
This is the drop here is going to be so bad in trading volumes.
And if you read between the lines here, it's why are you going to give your employees this stock-based compensation that's out of line with market realities? Is you're part of a financial movement that's part financial movement and part religion. And you're in this amazing moment, which he was, in the past couple of years.
What's the religion? You mean like digital assets, crypto? Yeah.
Bitcoin, Jack Dorsey, Bitcoin will bring world peace.
You should pay them in Doge. It'll cost nothing.
Exactly.
Right.
Right. So when that is in the moment where the religion seems like it's doing real well, and it was last year, all of a sudden these, good financial management, all that stuff goes right out the window because you're like, oh, this is the coin is going to be worth, every Bitcoin is going to be worth $100,000, $200,000, real soon. And we're going to be the number one place for people to trade these things. Obviously that hasn't panned out. And now, when the water recedes, you start to see what the real issues are.
Well, not to beat this dead horse, but I'm going to do it anyway. Last quarter, there was a 35% increase in stock-based compensation. We know that's not going to repeat. While revenue was down 53% of the same period. So that quarter looked ugly. This is going to be a freak show of a quarter.
Can I tell you why though? Also, why that's so true? Do you know anybody that right now is on Coinbase trading crypto?
No.
Isn't that like doing the Macarena? Can you think of something that's more ridiculous, and out of step with how people are living their lives right now?
That is a good joke.
What'd you do today? Oh, I did some buys and sells on crypto. Really? You did? Why? So, all right. So that won't be forever. And maybe the asset class gets its bounce. But this is the thing that nobody seems to have spotted. The inherent flaw is that the trading commissions for every asset throughout the course of history have only done one thing. They've contracted until the point that trading was free. And now you have the guy from Binance comes along and he's got the capital and he says, hey, free trades. If you're a Coinbase user, unsophisticated, you probably don't even know how much they're charging you. I know I don't.
It's like it was 1.5%.
Is that it? It could have been 8. I wouldn't have been. Honestly, how would I know? Because first of all, I don't even think it's a real market. I think you're trading against them. That's number one. So maybe you're trading against other people on their platform. My orders are definitely not being shown to like the global crypto markets. So I think it's a fake market to begin with. I'm probably trading against their own market making operation. And if they were scalping 6%, 8%.
No. Wouldn't they have to disclose that? They would be making so much money.
That's the point. Have to disclose that to who?
It's a publicly traded company.
Who is the authority? Literally the Wizard of Oz? That's the point.
The SEC.
They are? The SEC currently oversees Coinbase's trading operation? Tell them that. I don't think they know. So this is the fascinating thing. So if you believe in this asset class, you almost can't be bullish on Coinbase unless you think that all the other services that they're going to sell their customers will outweigh how much of that trading spread they are inevitably going to lose.
I actually disagree. Short term, I think if you are, and this is just my opinion, I could be wrong, if you are bullish on crypto, I'd rather own Coinbase than Bitcoin.
Oh,
I think you're getting like more juice.
Wicked cold take. No way. If you're bullish on Bitcoin, Bitcoin rallies, Bitcoin doubles, Coinbase more than doubles?
Yes.
From today's price?
Yeah.
Why?
I think you're getting more juice.
You think you're getting leverage on the price of Bitcoin?
That's not an opinion. Recently, Bitcoin, what the hell is the name of it? Coinbase is a higher beta trade to Bitcoin. Bitcoin's up 8%, Coinbase is up 12%.
Yeah, I just don't think that lasts the whole way.
Well, it's not going to last the whole way. It's like short term. Short term.
If free trading becomes a standard, it'll happen in the next bull market.
But don't you think that's also one of the reasons why, again, I keep saying Bitcoin, Coinbase is down 86%. Everybody knows trades are going to be free.
Agree. Maybe it shouldn't be down 86%, but we'll find out. I just find it hard to believe that in the next bull market, we don't see all of the exchanges and brokerages and trading outfits try to take share, and the way they're going to do it is free trades.
100%. And this is what I'm curious to see. So all this bad shit that we're talking about, how much of it is in the price of the stock? And unfortunately, recent experience shows that there could still be downside surprises when you think everything bad is priced in. And I hope we're at the point where we could get some really gnarly... I wouldn't short
Robinhood or Coinbase.
I hope we're getting to the point where we get some really gnarly numbers and the stock stop going down. And then we're like, all right, thank God.
You think we could be there?
I was about to ask you guys that.
I wouldn't short either one.
I mean, I wouldn't. I don't know. I'm not shorting any companies. I'm only like in index funds. But you
think Robinhood ends this year as a standalone company? I don't.
That's a great question. But I think that they already have some acquisition interest.
I'm sure that they do.
Yeah. Here's my most recent nothing is priced in. Bed Bath & Beyond, there's nothing but sell ratings. Everybody knows it's a piece of shit. After Target and Walmart just reported gigantic inventory build, you would think that Bed Bath & Beyond, legitimately 97% off its high. All right, we get it. This stock is bad. It's bad. They had one of the worst quarters I've ever heard, and the stock was down 26% in a day after being down 90%. So I know it's just one example, but you just see, we saw it for the last 3 quarters. Oh, the stock's down 70%. It's got to be priced in. Nope, it's down 28% after hours.
Remember, though, that, like the Ant-Man and the Wasp?
Of course.
And like that's, how they go into like the quantum verse or something?
Yeah.
Mm-hmm.
Where like none of the laws of physics behave the way they're supposed to. When a stock gets below 5, it's the equivalent of being in the quantum realm.
Great take.
Because look at Revlon. This is a company in bankruptcy with a stock price that's tripling. They could literally sell stock right now and like fund a portion of the cost of bankruptcy and pull themselves out of it, or fund some of the liabilities that they couldn't prior. I think it's REV. I don't know if we have a chart, but like below a certain dollar figure, throw it all away. You could have a stock like Best Buy fall another 26%, even after it's been crushed.
Because at that point, there's no institutional law.
But you could also have Hertz or AMC or GameStop or one of these companies like literally have the most miraculous rally based on nothing. And Revlon is just the latest example of this. It's literally a bankrupt company where people YOLOing into the stock are being rewarded for how bankrupt it is.
I'm surprised people are still YOLOing into stocks. I thought that was almost like a phenomenon of free money and zero interest rates.
Dude,
but
this
it's
is
still happening.
Okay. This is the Wall Street Journal today. Revlon shareholders
That's a hilarious headline.
say bankrupt company has equity value.
Yeah, sure it
Just
does.
let's pause on that.
Yeah.
Think about
That's
that
wild.
statement. Every
Yeah.
textbook at every business school in America does not have a sentence that says that. Minority shareholders say the stock is in the money,
It's like the Onion.
but that holders won't be adequately represented by controlling owner Ron Perlman. So basically, there's a group of Revlon stockholders who say that minority owners should have a louder voice in the Chapter 11 case because they're there.
What do you call a group of Revlon shareholders?
I don't know.
I don't have a good joke for that.
Oh, okay. I would say bag holders, but they'll probably make money. What's this Carl Quintanilla tweet? Worst week for the cloud since the beginning of the pandemic. What are we looking at here?
Just what you said.
John, throw this up.
You said it.
So this is First Trust Cloud Computing ETF. What's in this?
Let's see.
It's got to be
You know what
Google,
pisses
Microsoft.
me? You know what grinds my gears? When you Google something very specific and it's got like the ads on top. So for example, I Google SKYY Holdings and now it comes up. But you got a bunch of shit come up beforehand.
Like what?
You got Invesco, First, whatever. All right. Anyway,
That's why Microsoft won the Netflix deal.
there we go.
Fair.
All right. So we've got Alibaba. Really?
Yeah, they do cloud.
They're the biggest holding? I would not have guessed that. Pure Storage, MongoDB, IBM, Google, Oracle, Arista Networks, Microsoft, Amazon, VMware.
So it's the NASDAQ 100 plus Alibaba, basically. Okay. It's time to sell Meta until it figures out the metaverse. So you wrote about this in May. How do you figure out the metaverse if you're inventing it as you go? Like, aren't they building the tracks while the train is coming down them?
Exactly.
Okay.
And, this is kind of why I'm skeptical of it. I think Marcus Brownlee, who's a tech YouTuber, said it best. Like, it sounds like a cool idea, but I need to know what you're going to do with it.
Yeah.
And right now, we really don't know what we're going to do with it. I had this. Let me see if I can pull it up.
Don't we kind of know though? They're gonna basically do animated Zoom meetings and sell ads.
Exactly. So I think that it's a enterprise thing.
Okay.
Mostly. Let's see if I can find
So
it.
while you're looking for that,
Yeah.
Alex, I love this quote from your article.
You probably have it up.
Nick
Yeah.
Clegg, who is
sorry, go ahead.
Meta's president of global affairs. This is an actual quote. It's an amazing sense of presence being in that virtual space. I feel like we should have music behind us right now. My voice relaxes so much more when I'm speaking to people in the metaverse. How much mushrooms is this guy on?
Yeah. That's a very acidy.
I mean, he's just moved from the UK out to San Francisco. It usually takes about 2 years until you do acid. So
Let me repeat.
He's right in the
My
pocket.
voice relaxes so much more when I'm speaking to people in the metaverse.
Well, he's talking about the meetings that they'll do with VR goggles. And, maybe he's trying to say that that's much better than on a Zoom meeting where you're basically yelling into a monitor because we all know it's better to kind of hang out in person than it is to talk through a monitor. And so they're trying to say that this is, what the selling proposition of the metaverse is, that you can be next to somebody. And so he's trying to say, okay, you're going to feel like you're next to them. You'll feel better about it.
So what's your overall take that it's too early to have like a very harsh judgment about this?
No, I think that right now the most potential here is enterprise, and
Makes
you
sense.
should factor that into the way that you're thinking about what the metaverse is going to be. Here's the quote I was looking for: that about 75% of Americans live less than 30 miles away from a parent or adult child, and only 7% live more than 500 miles away. So this whole idea of like we're going to want to be in the metaverse with our friends to do fun things, like we already have them. Most people have them close by. And Silicon Valley has this, I guess it's a plus and a minus. It has a way to think outside of the box, but sometimes you can become too detached from the reality of the lives of, real people in the world.
Right.
And the fact that and of course you move there from wherever town you grew up because, the headquarters of Meta or Apple or Google are out there. So you think everybody lives away from their family and closest friends. In truth, that's not the case. Most people live close by to the people they want to hang out with We don't, we might need a Facebook once in a while to check in what's happening with our long lost friends. But the people we actually want to spend time with, because spending time is the biggest investment you can make in anything, they're right there almost always. And so that leads me to believe that the social impact, the social element of the metaverse, we will eventually have a society in virtual and augmented reality. Less likely. The idea that maybe we want to do stuff at work so we could all work from home and then get in a conference room together, or if you're using augmented reality,
I could buy that.
I used the Magic Leap 2 device and watched on a table.
What is that?
It's augmented reality glasses that you can put on and see things that are actually appear in 3D and interact with the physical spaces that you're in. So I watched as a wildfire spread across a table that matched the topography of real world terrain that a fire department could use to track the progress. And you see all these options come up okay, now we have 9% evacuated. Now we have 20% evacuated. To me, these uses of VR and AR make a lot of sense, but I just don't see them as the next phone. Phone everybody uses. It's a way that we in the real world interact with the digital world wherever we are.
Yeah, so teleconferencing is a 30-year-old or 40-year-old thing.
Yes.
So this is just a much better version of teleconferencing with more bells and whistles. but
potentially, yeah.
But ultimately, it's enterprise.
Although, you know what's crazy? How not long ago we were at this very conference table and we had one of those machines. I don't know who made the product. And it was a 3-pronged thing, right? With a speaker in the middle. And when we would do these calls, we would lean over it.
Yeah.
That was 3 years ago.
The phone. New research says that Generation Z actually hates working at home. Now that makes sense because they don't have kids yet. So I was going to say wait 5 years. But the benefits of working from home or having a whole remote workforce might be overblown. So if this whole metaverse concept gets lumped in with the other work from home shit, it's not great.
I love working from home, and I think a lot of people do.
No, I think a lot of people do. I don't think they love it to the point where they want to spend their whole week in a virtual.
True, but you're still seeing office occupancy at 50%. Nobody wants to be back in the office 5 days a week again ever.
I agree with that.
So if you see it as part work from home, part training, a lot of trainings get done. So for instance, how could you, let's say you're training for different scenarios and different jobs. How do you get practice doing that? You could actually get a lot better at that using virtual reality. It could also be used for different therapies. You have different fears, and you want to face those fears. Maybe you want to look over a high building, but just do it in virtual reality, so you're safe. You could do that. You could be wearing augmented reality glasses in the factory. You could be using augmented reality glasses, with other people. For instance, I used that wildfire example to collaborate and look at how things look in the real world. I think these are all real applications, but I think Josh is spot on this. That when you think about what the potential is, and if you look at the way that it's talked about and the way that it actually has a chance to make its way into the world, these pie in the sky ideas of us all living in a metaverse, just don't really seem to be practical, in the real world.
I also don't even see it as pie in the sky. Who really wants that? Other than people whose real lives are.
That's what I was going to say. I don't know anybody in my real life that's dying for the metaverse.
Right. But Josh, when you were on my podcast, you talked about how we're right. We see it in one particular application, which is gaming.
Yeah.
Roblox is the metaverse right now.
That's right.
Kids do. So you have kids, right? I've seen.
Yeah, not my kids beat up the kids that are on Roblox.
Really? Okay.
Yeah, but I know kids that are on Roblox, and they're nice. They're nice kids. They're just not my kids.
Right. Exactly.
My kids don't want that shit. They want to be outside.
So by the way, it goes to show you the limited. We're not going to all want to be in this metaverse thing.
That's right.
So, and there are kids that will spend.
It's not the whole world plugging into the metaverse, but the people that want to be on video games all day. They will love it.
Yeah, exactly. And so then when you take a look at what is the potential market for this stuff, it just gets narrower and narrower the more you think through the real world use cases.
It's a $70 million TAM.
Until they do porn and then throw out everything we just say.
Exactly.
Because porn is what saved AOL, and porn saves every version of the internet eventually. So that's the real game changer. But we won't go any further there. What's this Klarna chart? We shareholders in this piece of shit, Mike?
Yeah,
we own this through.
Don't tell anyone. It's down
We own a very, very small amount of this.
All right, well, a firm is down like 85%. So what do you think it is? Of course it's down just as much.
Of course. I'm not surprised.
For our listeners, could you read the heading of this chart?
Buy now, cry later.
So good.
Swedish fintech startup Klarna's valuation history. So let's just narrate this. It was worth 0 in 2017-ish. And then they got a really big investment from Silver Lake in September 2020.
And then they got a really big investment.
And then at the top of the bubble, June 21, SoftBank came in and just said, how much do you want? We'll give you double. So they invested, that's a $40 billion valuation.
I think it was 45.
$45 billion valuation from 0. And now it has collapsed. How do they know what it's worth today? Did somebody just put money in?
Yeah. Or did they write it? I can't remember. $6 billion. But no, they raised money. $6.5 billion. They raised money.
They raised money at a $7 billion valuation a year after raising at 45.
All right, but that's exactly what it is. That's what the market is.
You're not surprised by that at all?
I'm surprised by it. I mean,
why would you raise money?
They needed it.
Yeah, I don't know. I mean, buy now,
why
cry
do they
later.
need it? What are they doing?
Giving it
What
away.
are they doing with the money?
Growing.
But if you raised at 45, you need money a year later at 6? That's a really poorly run, no offense. We love you, Klarna. I don't know. I mean, do I have to even hold back and say that is not good capital allocation? Most likely.
Most likely.
Maybe you say you could deploy it though and end up, making more deals with people.
Yeah, I suppose. I don't think that's what's going on. I think maybe they see a firm in the public market down, to your point, down how much? 80%?
Yeah, whatever it is. 81?
Oh, wait, no, if that's 5 years.
Wait,
62
didn't Jack,
over the
didn't,
year. 77
didn't
since
Jack Dorsey buy
January.
one of these? Was that a firm?
Yeah, he bought a huge Australian one. I can't remember what it's called. Was it SquarePay? No. Afterpay?
Afterpay. Okay.
Is that what it was?
Yes.
So a firm, it was down 87% off its highs.
Oh my God. All right, so then this
So
makes more
I
sense.
think maybe why they're raising money is maybe they're getting ready for losses, for people to stop paying. Buy now and pay never.
Okay. Obligatory Elon Musk versus Tesla. Give me your spiciest take.
I think Elon's in.
We haven't spoken about
You're
this
right.
yet.
Right. I've been getting killed for this, and I could be wrong, but I'm just going to go with what I believe.
Okay.
So, Elon has clearly violated this contract. He agreed to buy Twitter.
Yeah.
He's not buying Twitter.
He doesn't care.
And exactly. So the question is now that we know he violated, what type of remedy is the Delaware court going to rule on? What do they say? Okay, you're right. You violated the contract. Here's what we're going to do in response.
Hey, back up. How about he violated every disclosure rule on the books?
Correct.
He went up to 9% without saying what he was doing. You can't go to 5% without saying what you're doing and whether or not you're passive or active.
Right.
He filed passively and then made a bid and then called them and said, put me on the board or I'll buy the company or I'll start a competitor. So like he already starts off before he even makes a bid to buy the company in violent. Nobody cares. He could literally drive drunk and kill 5 people and I don't think it would matter.
Well, this is, and there are different jurisdictions here. So some of this stuff is SEC, some of this is going to be now looked at by the Delaware Chancery Court.
You know what happens when he does something like that, where he violates a norm? The same thing that happened with Trump. 5 people get upset. The people who are really in a position to do something about it don't, because they say, A, oh my God, I can't get involved with this guy and his army of Twitter psychos. And B, why would I go after him for this when he's about to do something so much worse? Like his next atrocity is 2 weeks from now. So I think that momentum of like no one's going to bother me because wait till you see what I do next. That's why he's probably going to get out of this thing.
Right.
What do you think?
So I think that's I think he's probably going to get out of it. He might pay $1 billion or come to a settlement that's a little bit ahead. But the reason why I don't think the court is going to enforce this provision called specific performance that's going to make him close the deal is you listen to the people who have been on the court and you listen to the lawyers who are dealing with the court. And you just get a picture that they really don't want to rule. First of all, specific performance. To force someone to buy a company they don't want,
it's not going to happen.
It's an extraordinary remedy. It doesn't happen very often.
Yeah.
Now, the person who's a chancellor of the Delaware court who's going to hear this has actually enforced it in the past, but $500 million deals, not $44 billion deals. And there was an amazing interview on CNBC this week. I dropped it in the doc. Carolyn Berger, who's the former vice chancellor there, said some things that just really made my jaw drop. So I'm going to read a little bit if that's okay.
Please.
So she said, I think Twitter is in a very strong position to be on the winning side. Everybody agrees with this. Elon violated this contract. Now the question is, what are they going to do? So she says, now that's not to say they necessarily will get specific performance. Why? I mean, like the damages are capped at $1 billion. Might not be, anywhere close.
So how
to
they're in a strong position to what?
Exactly. Well, the legal case is strong, but now the question is, does the court want to enforce this specific performance remedy? And this is where it really gets interesting. So she says the problem with specific performance, especially with Elon Musk, is that it's unclear whether the order of the court would be obeyed. She said, and the courts in Delaware and all over are very concerned about issuing a decision or issuing an order that is then ignored, flouted, and reflects poorly on the court in terms of being able to give relief to the parties that are asking for it.
You know what that means?
But can't they put him in handcuffs if he just ignores the
No.
So this is
say, all right, I'm running it.
The second part of her quote talks about what they can do. So she then says, so they're able to fine him. That's the power that they have.
Fine.
And so they say,
find the richest man in the world.
Exactly. And this is the former vice chancellor of this court. She says, it's hard to imagine an amount of money that is going to be persuasive to him. So it enters an order, and even if it's $1 million a day or $10 million a day, this is amazing. It'll just pile up in terms of being on some ledger somewhere, basically admitting that it's powerless. But that won't necessarily result in Elon Musk doing anything. So even if Twitter has a Loctite case, they're going up against a court that thinks like this. And they're going to have to settle with Elon because they can't risk going all the way and losing.
This is not just any court. This is the Delaware Chancery Court.
Yeah.
Why are you whispering?
Because every single major corporate merger acquisition in some way, shape, or form involves the authority that we all thought this court had.
Yes.
But it's like everything else, why the country's falling apart. Because all these things that we thought were rules and had to be obeyed, it turns out they're like just norms.
This is horrible.
It's bad.
There's 80 versions of this that we've all collectively traumatically experienced in the last 5 years where you're like, wait a minute, you could do that? Wait, you could do that? You could do this? You could just anybody could do that?
What a dickbag.
So that is the problem with extreme wealth and extreme money in politics and people who become so invincible that they shit all over our institutions. Because now forget about who gives a shit about Twitter. What does this mean for just corporate law in general if the out is I have enough money that I don't give a f***?
How about just the rule of law?
Yeah, it sets a terrible precedent. But
It's
in the back of my head, guys, I'm just like, well, what if they actually do try to make him buy it?
Alex, I don't want to live in a world where you can't rely on
Neither do I.
Delaware
Come on.
No, we hear the church is done.
Yeah.
Congress is done. Now Supreme Court is completely partisan hack joke. The Electoral College. There's like nothing. There's literally nothing left. I do feel like, especially during the Trump years, the last thing standing was the stock market and bond market, and like even the Fed fought for its independence to the extent it could. Like that's like now going to start slipping away, and this is a really good example of that. And
let's talk about
nothing else good to say.
Yeah, my God, it's enough. Let's talk about
yeah.
how absolutely horrible some of these social media companies have been for their shareholders as publicly traded companies. John, can we throw up the chart of Twitter, please? Just
I like how you went out of your way to make sure these charts were unviewable and unreadable.
Well, it's not me. It's the lights. It's the lighting.
Is there even a ticker symbol on this chart?
I'm telling you, asshole, it's Twitter.
Okay.
That is a lifetime chart of Twitter.
It's one of the worst stocks I've ever seen.
Disgusting mess. I'm offended by this chart. Let's throw up the next one, Snapchat.
Wait, before we go to Snap,
He's offended.
can we also like point out the fact drop that bomb. Can we also point out the fact that Twitter's being held up? Twitter should be much further down, but it's being held up by this
it rallied
potential.
Today. Why did it rally today?
People are reading this case and they think there's a chance that Twitter might win.
Win what? What did you win?
Exactly. Well, it might get a settlement from Elon, or it might.
What do they think he's going to write a $10 billion check?
I think that is what people think.
Twitter
I happen to disagree with that, but that's what some people think.
This stock would be at an all-time low if Elon wasn't involved.
Matt Levine, I think, broke this down better than anyone, as usual. Basically said in court, there's only two outcomes.
$1 billion fine?
$1 billion fine or Elon owns Twitter.
$1 billion fine.
That's why I think it's going to be a settlement.
For $44 billion.
Yeah.
But that's in court.
No, here's the deal.
In the real world, a lot of different things can happen.
Well, you can settle.
I think that I don't know if this is giving him too much credit. He wanted to sell his Tesla stock, and this was how he did it. And it was one of the greatest. Josh made this point. It was one of the greatest sales of all time. This gave him the guys to unload $10 billion worth of Tesla stock or whatever it was, and penalty.
It was $12 billion. 5 or 10% off the all-time high.
And this was the penalty. And by the way, how many times over the years has Elon tweeted the price of Tesla stock is too high?
Many.
And this gave him an out.
Well, here's the problem I have with that one. If you're going to offload the Tesla stock, fine. But then why not just use it as to become like an influential shareholder in Twitter versus sign the deal that will now get you into all this trouble?
That's a very fair
There's
rebuttal.
no thought behind any of it. It's
Clearly.
pure impulse.
That's a fair rebuttal. Next chart. Look at this piece of junk.
This is
Snap.
This is Snap.
Oh my good God.
This is round trip to when? 2019 price?
To forever. I mean, just pure steaming trash.
Do they make a lot of money, at least?
No, they actually have more users than Twitter and less revenue.
How is that possible?
Less revenue than Twitter?
I think
they're
either-
worse at monetizing than Twitter?
They are worse at monetizing than Twitter for a few reasons. One is people are there for the messaging, not the media. It's really hard to inject ads in media.
My kids use it as text.
Exactly.
They're on Snap all day.
Right. And if you're on Twitter, it's like kind of easier to inject an ad into that feed. But if you're on Snap and you're having a chat with
where
someone,
do you put the ad?
Exactly. You put it in the media side of the thing. So that's why they have Snapchat Discover.
And nobody uses that.
It's used less.
Yeah.
And they also their ad practice is not very well built out. They've been slow.
What do you think of him relative to the people running the real tech giants? Evan, is he like impressive, or did he just have a really cool idea 10 years ago and he's been riding it ever since?
Well, you got to give him a little bit of credit for.
I do. I do.
Yeah, I give him credit too. I think that it looks like Snapchat was going to be killed by Facebook.
And they
And
weren't.
it's still used by a lot of
I'd
people.
much rather own Snap. So Snap is on Twitter's trail in terms of revenue. It's closing the gap. And if you look at free cash flow, unlike Twitter, which is hemorrhaging, they're actually, boom, crossover. Snap's going in the right direction.
How many more users does Snap have than Twitter?
It has about 100 million more per day.
Wow. And those people sit on it all day.
Yeah, because they're using it for messaging.
Twitter, I feel like you check in, you like hate check, and then you like run away as quickly as you can.
Exactly. You go,
Right.
wow, why did I just do that?
Snap, you love it because it's your friends sending you pictures of their faces and whatever else.
And it's like used. I mean, young people love it.
They love
it's
it.
Used by like what I had the stats in a previous newsletter, but like by 95% of teens in the U.S.
So I drive my daughter to a party, and she likes the way she looks that night. So the whole way there, we don't talk, but she has the phone in her face, and she does a snap to every single person she knows, and that's just how they communicate. And Facebook couldn't disintermediate that.
Yeah. It's 115 million more daily active than Twitter's 217 million.
That's a big number.
huge.
We're gonna go to this 3AC thing, and we're not gonna spend much time on it. But just before we get into favorites, have we learned anything from this? Is there anything here for all the complexity of the new crypto ecosystem? The smart contracts, reams of online white papers, heady talk of decentralized finance. It still proved to be a giant wager on the simple idea that there would always be more money for buyers, more buyers for digital coins, and prices would mostly keep going up. Is that like a fair postmortem on Three Arrows, or did we learn something new from this? I feel like it's a very old school kind of like the money dried up, and somebody had to feel it first. And that's really what
I don't think it was a matter of the money drying up and the borrowers slowing down. It was just they blew up. And I think the lesson was everybody was exposed to them, even if they weren't directly exposed and people didn't know it.
How will that change now? Are people going to be more? Are people going to demand that their counterparties disclose who their other counterparties are?
I can't imagine it not being the case going forward.
But again, nobody's in charge. So,
What do you mean nobody's in charge?
Nobody's imposing rules like that.
On
on
you
transparency.
mean regulatory wise? I think that Genesis, for example, who sits in the middle of a lot of this, is going to be much more or much less forgiving with what sort of transparency they're seeing from their borrowers and lenders.
What's this article from The Guardian? They couldn't scream anymore. They were just sobbing. The amateur investors ruined by the crypto crash.
It's an unbelievable story in The Guardian talking about people who thought that they were in the beginning of a financial revolution and were finally going to get their chance to get rich. And some turned like $2,000 on a credit card into $500,000 only to be broke, a few months later. And it talks about the pain that, these people have gone through in a way that like tells this story in a human way that I don't think has been told before. And the headline is that there was no, they couldn't scream, just sob. And that is in reference to, I think, a Telegram group where people who had lost lots of money on crypto do like screaming therapy, where basically they just yell, and some people can't even bring themselves to yell, and they're just crying. And I learned something really fascinating in that story, which is that there are actual rehab centers that actually do rehab for crypto addiction. There's this one place called the Castle Craig Hospital. And here's from their website. It treats cryptocurrency addiction for people addicted to trading, spread betting, and I guess trading of cryptocurrencies such as Bitcoin, Ethereum, Ripple, and Litecoin. We treat all these as a form of gambling addiction.
Yeah, that's what it is. It's not even fun. I shouldn't laugh. That's what it really is.
Right, it is. And some of the symptoms of that the cryptocurrency users should look out for, suggesting an addiction, are feeling of muscle tension and anxiety, constantly checking prices online, even in the middle of the night, and thinking about cryptocurrency trading when doing other things. And a lot of the people in the story exhibited those symptoms.
You know what the difference is, though? If you're a degenerate gambler taking like Lady Vol's Tennessee female basketball games and shit, like you're taking games you don't even watch, or Sunday you sit down and you have a bet on every game on the schedule. If that's what you're doing, you're not simultaneously tweeting out how you're changing the world and better than everyone else who isn't doing that.
Well, that's what makes people hate these folks.
It's the messianic bullshit about how you're like taking on banks or whatever nonsense you think you're doing, combined with the degenerate gambling. That makes me not feel bad.
Yeah, they call themselves degenerate gamblers also.
Degens.
Yeah.
Degens,
yeah. So like, in other words, like if you're... It makes it less sympathetic, even though, yes, of course, gambling addiction's horrible. It's like addiction to everything else.
Well, that's like in the 3AC story.
I'm addicted to carbs. It's bad. I know that.
In the 3AC story that we're talking about, like one of the 3AC guys talked about how only boomers trade stocks. Meanwhile, he's putting $200 million into Luna.
Fire.
And this exactly, it's like, they're have fun being poor, and please, have sympathy on me for my life being ruined.
Running away from Interpol. All right,
vibes are off.
Let's do Chief Vibes Officer, and then we'll get to this is like the most crypto thing in the world to me.
So hang on. So we had 6 topics in the doc today. And for number 6, Josh wrote, you wrote this, right?
Yeah.
Josh wrote, what the is this? So I clicked on the article this morning.
Did you laugh as soon as you saw it?
Well, because I saw this, and then I clicked on the link, and of course I laughed out loud. The headline is, it's from The Guardian, can Chief Vibes Officers and NFT influencers keep things positive amid the crypto collapse? You know what?
This is why it has to get
I hope
worse.
not. I honestly hope not. As somebody, I own crypto. I believe in it. I hope not. Please collapse.
Don't call it a collapse. It's just a vibe shift. Since January, the market for NFTs has been locked in a downward spiral, with sales on one popular platform falling to less than 1/7 of their January peak. And the buyer of the so-called Mona Lisa of the digital world, a $2.9 million NFT of Jack Dorsey's first tweet, being forced to sell for just $6,800.
So these are the people you can't feel bad for. Listen, if you could spend $2.9 million on a picture of a tweet, you're fine.
Yeah. To shore things up, NFT projects have turned to a new kind of role, the Vibes Manager, also known at some companies as a Chief Vibes Officer or Director of Vibes.
The CVO.
I don't hate the title, and actually I want to give it to Nicole.
I was about to ask if we could hire a Chief Vibes officer.
We have one. She's like kind of like building the vibe here.
Yeah.
I don't hate the title. I just hate the idea that you could mask 90% losses with vibing out. So what are they going to do? They're going to dress up in costumes, or I don't know.
I just wrote one note on this story, and that was, this is the goddamn problem.
Yeah.
You have there's this quote in there from a person that says, I'm just another degen on Twitter that wants to make a quick flip and have fun. I mean, it's insane. This is the entire problem that got people, over leveraged and putting their life savings into this stuff. And they end up at the, what's it called? The Castle Craig Hospital after, they get locked up in the vibes.
Listen to this. among the first to hire a Vibes director was an NFT startup called Fractional. The job went to an influencer named Deeze, Deeze, who a spokesperson called, quote, a super influential commentator and tastemaker in the NFT space and, quote, the most public-facing person at the company alongside the founder. So it's like when you go to what's it called? When you go to like a Philadelphia 76ers game and the baseball team, the Phillies game, and the Philly fanatic comes running out. Yeah. It's like not an avatar, a mascot. Mascot?
Yeah.
Yeah, that makes sense.
So
do you guys remember Shingy?
Shingy.
Yeah, they're all
from AOL.
Yeah, he was their digital prophet. I feel like these are all like Shingys, but worse.
We said that the price of a firm is down 87% or whatever. Somebody recently told me that they invested in a buy now, pay later company for NFTs.
Oh my God.
Imagine thinking that somebody would buy now and then pay for it later.
When it's down 99%.
Yeah. It's time for them to raise more money.
Okay, make you installment payments now, but at the initial price.
Oh my good God.
All right, so Vibes Officer is not the worst idea, but Vibes Officer for Ponzi schemes probably not great.
We don't like that.
But what are you going to do? All right, let's go to favorites. I'm going to go last this week because somebody mentioned that I always go first, like I'm in some kind of a rush. What do you got for us today, Alex?
Has anyone done Be Real as a favorites before?
Be Real from Cypress Hill?
I never heard of it.
Be Real is it's my new favorite app. I figured since I cover a lot of social media, I'll talk about a consumer social app that's kind of fun. And for folks who know about Be Real, we'll just give it some love. Be Real is an app that gives you a notification on your phone once at a random time a day, and you have 2 minutes to take a picture. And it takes a photo from the front camera and the back camera, so like almost like a selfie in what you're looking at, and then it posts it. That's it. And if you
I kind of like this.
If you post
it's like
late,
a game.
Exactly. If you post late, everybody's gonna know that you're late.
Okay.
So the idea is you want to
follow your friends on there.
Yeah, you can follow your friends. And Casey Newton tweeted unless we've gone out to dinner or something like that, don't ask me to be your friend on Be Real. Like it's supposed to be like your close friends, and it's actually like the name Be Real. It sort of talks about what it is. Like
it's like a dare.
It's a dare, and I'm
so
serious.
into this.
It's a cool one, and you can't fake it really. And so it's very different. Your Be Real feed is so different from your Instagram feed. Because you're just going to see people going about their daily lives, and you're going to get a sense of them. Like,
all right, I'm following you. Why were you at a seedy motel 2 hours ago?
Was that me?
Yeah, that's you. Oh no, sorry,
no,
the wrong Alex Kantrowitz.
Yes,
couldn't be you. Hey, breaking news: Ivana Trump dead at 73. We have any opinion on this or
nope?
Rest in peace.
Rest in peace. Okay, what do you got for favorites, Mike?
What am I watching? I've been watching a lot of Netflix. The original content on Netflix is still whatever, but they've been expanding like their library.
Greatest hits movies.
Yeah, a lot of
that shit.
Tons. A lot of 90s. I rewatched Goodfellas. I told you. This week I watched the original Jackass again. Haven't seen that in a long time. And then last night I watched Jackass 2.5 or Jackass Forever, I think it was called. And Robin walks in. She's like, "Why are you watching so much Jackass?" And she goes, I hate when you laugh like that. It was like just my uncontrollable belly laughter. Like few things get that funny bone going, but Jackass got it going.
It's good stuff. Classic.
You're a grown up at this point.
Right.
You can't have your wife come in the house and you're belly laughing over Jackass.
Belly.
And these guys are like lighting each other on fire, and you're sitting there cackling,
dying.
Oh, that's great.
Michael, you also suggested Ozark season 4, I think, on a recent episode. So
I loved it.
Was that you? Yeah.
Did you not? Some people didn't like it.
I loved it. And just wanted to say thanks because after you shouted that out in favorites, I was like, I might as well check this out. Oh, it was amazing.
I thought they landed the plane
perfectly.
marvelously.
Yeah.
I think some people get that wrong. They're like, they got off the hook. Got off the hook. It was a debacle.
It's a nightmare.
Now their son is a murderer. They're never getting out.
Exactly.
That was the point.
Yeah. That was the point.
It was a horrible ending.
Yeah.
Right. They didn't end up like changing their identities or whatever. They ended up in a car fleeing one shit show with all of the baggage that came from it.
Everyone that they touched died.
Yeah.
Yes.
It was horrible.
Yes.
Could not have ended worse.
I thought they nailed it.
Yeah,
and that whole
great.
season, the tension was just like there the whole way through. I was really waiting for a letdown after people were like so mad about it, but it was amazing.
I would have taken a
thanks
Ruth.
for that one.
I would have taken a Ruth spinoff. I don't think they had to kill her. Maybe they had
That
to,
one,
but
but
you
know what? You know why they did? They didn't, but it hurt. That hurt.
Yeah.
Yeah.
It definitely hit home. Favorites for me, I have two. Nick Majuli's blog post this week, which I know Duncan, Ben, and Nick covered in video form on our YouTube channel for Portfolio Rescue this week. I just thought it was really a brilliant way of reframing something that he has already done a lot of work on. So Nick is well known for doing all these posts about dollar cost averaging versus investing a lump sum. And somebody asked, if I'm going to withdraw 4% of my portfolio every year, what's the best way to do it? Take it all out in January or do it in quarterly installments throughout the course of the year? And he ran the numbers, and actually it proves what he's always said about lump sum investing versus DCA. You should buy all at once if you can, because markets have an upward bias. The data suggests lump sum is smarter than dollar cost averaging. But then when you sell, you should sell slowly in installments rather than all in January.
That's fascinating.
Fascinating, but it's like the opposite of what he was originally saying, and it proves it. Because, again, markets have an upward bias, so
But wait, it's the opposite, but consistent with what he's saying.
completely consistent with what he's saying. So you want to buy all at once, and then you want to take your time selling out. And that's because over long periods of time, markets have an upward bias.
Unless it's 2022, in which case you should have sold the January.
Well, that's one of the points he made was this year is the exception that doesn't prove the rule, but just shows you there is no rule.
Right.
But he's looking at 5, 10, 30-year increments of time. If you did this over 30 years, 100% of the time,
It works every time.
It works every time. Also, the new podcast from Colossus, our friend Patrick O'Shaughnessy, he dropped this in his main Invest Like the Best feed. Otherwise, I might not have found it. William Thorndike, who wrote The Outsiders, one of the best books about business and investing ever, is doing a podcast for the Colossus Network called 50X. And he's going to interview management from stocks, companies that have had a 50X or greater return for shareholders.
Very cool.
So the first episode was the guy from TransDigm, which was like this defense company conglomerate that compounded at 30% a year, like for 30 years or some ungodly return. And it was great. And Thorndike is a very thoughtful interviewer. He doesn't talk much. He asks a question, he lets the guest go. And I thought it was definitely worth checking out if you're an investor.
Well, actually, a lot in that book is all about like capital allocation.
Yeah.
I am very curious to see what happens to a lot of these companies that raise a ton of money, where they're just sitting on money and like we're no longer in growth mode. Like, what are they going to do with all this cash?
Yeah.
Are they going to spend it on stadiums? Are they going to rebuy back stock? Are they going? What are they going to do?
So the guy from TransDigm makes so many great points about how like everybody wants a decentralized business where you empower your managers and they make decisions on the ground and blah, blah, blah. Everybody wants that until things are going wrong. And then it's like, well, I only own my good decisions. So there's like a lot of like great stories from how they built this massive aerospace and defense conglomerate that I think everybody can get a lot out of. So shout to Patrick O'Shaughnessy and William Thorndike and Colossus. Okay, that's it for us this week. Jeff, fun?
This was amazing.
It was cool,
you guys
right?
Are great. Like I say, I listen every single week. This is my favorite podcast.
Thank you.
I've learned a ton from you dudes, like over the past couple of months that I've been listening.
Well, we're learning from you now.
I appreciate it.
We're reading you. We're listening to you. You're doing a great job.
Likewise.
Let's give everybody the URL again so they know where to find your stuff.
I'll just say if you're interested in hearing more, Big Technology Podcast is the place to go. Big Technology on Substack.
Big Technology on Substack. Big Technology Podcast. Round of applause for Alex Kantrowitz.
Thank you.
You have something for me?
Yeah, can I read a couple of podcast reviews?
Go for it.
Okay.
If they're good.
Yeah, so up first we have one that made me laugh. Unhinge My Heart wrote, "It's all right. I only listen to every episode." and then let's see, we also have a name I can't pronounce said so good. So it's two great ones right there. And then we have from SMS Murray, great podcast. These guys are really entertaining, smart, and appealing to younger people. I saw Josh on TV and found this.
Okay, I could listen to these all day.
Yeah.
You want to do 20 more, or we got the gist?
Next week, maybe we'll do another.
Okay, so what should we tell people to do? If they haven't written us a review yet, what do you want? What do they do?
Go on Apple Podcasts.
Immediately.
And, and write us a review.
Please.
We appreciate it. And we
My
read
God. We read them, we appreciate them, and the reviews go really far. They tell the algorithm in the app what content is valuable and what's not by a lack of reviews. So don't write any negative reviews, but if you love a show like ours or Alex's, go ahead and leave a review. All right, guys, a lot of fun this week. Thank you so much for listening. We will be back very soon. See you next week.